I just like to do the right thing. I like to treat people well, try to do that as best I can. Certainly not perfect at it.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Dave Ferris here on the show. Dave, welcome.
Thanks for having me.
I'm excited to hear. Say, for the audience's sake, who are you? Where are you from? What do you do?
Okay, I'm a real estate investor. I'm from Iowa. I've been small town Iowa growing up. Couple different places. My dad was a pastor, so I'm a preacher's kid, and ended up graduating high school from Indianola. Was there for a couple of years. Graduated, went to Iowa State. After that, I went into the School of Business because I couldn't figure out what else I wanted to do. I knew what I didn't want to do, which was anything that was too intensive school-wise. So no engineering, no doctors, no lawyers. So went into business, and fortunately, when I was there, I think that was the first year they had an entrepreneurship program in the management, under the management major. So went into that. That was wonderful. After, I guess while I was there, I did, started a painting company. And so we would paint houses on the, during the summertime, and did that for a few years. Learned a lot. Didn't make a lot of money at it really, but certainly learned a lot when I was doing that. So
what did you learn in the entrepreneurial program there? What were, maybe what were one or two or three takeaways there from being involved in that?
Yeah, so we would do things like practice or exercises about starting a business. Come up with some idea, put a business plan together, and then we might have a class that's really just designed of just going through people's business plans and asking questions and figuring out how you're going to fund it, how you're going to market it, how you're going to all the different things like that. So, seemed to be a lot of focus on that. In addition to the normal management classes that we would have, and of course, all the other classes you got to take. So,
sure. Yeah.
So
you get out of school, and what do you do?
From there, I started working for a tech startup that was here in Des Moines. And that was a lot of fun. We were trying to figure out what we were selling all the time, it seemed like. So I did a lot of sales practice. While I worked for that company, we started a software, built out a software, ended up getting that company got bought and sold a number of times. And I just stayed with it. It's like I just followed that software program and then along through the other companies, but ended up being a business analyst really the role that I fell into. Continued to work for companies after that as a business analyst.
And sooner or later, you got the real estate bug. Tell me about the very first property you bought and kind of where that was in that time frame in your journey.
Yeah, so we bought 2 properties at once, only because we started looking for properties. I just got, the company I was at, when it was small, it was real entrepreneurial, and that was a lot of fun.
Sure.
But then as it grew, kind of loses that entrepreneurial feel. And so I was starting to think, it's like, what else is there? I should be doing something different. And I didn't have any great ideas. I wasn't an inventor or had, something like that. So real estate made sense. Read Rich Dad, Poor Dad, of course, like a lot of people do, and decided that, or my wife and I really together decided that we were going to start looking for rental properties. So we started looking. 2 different sellers accepted our offer. So we bought 2 properties at the same time. Yeah. Our son was like 3 days old. All of life was happening all at the same time.
Yeah. What year was that?
2004. And the great thing about that time period is that they would give a mortgage to anybody.
You're right about that.
So you barely had to have a down payment.
Yeah.
They were handing them out to everybody that walked, I think. So that was cool because we bought the first 2, found tenants pretty quickly. They moved in, and then we just realized how easy it was. And so we're like, well, let's just keep going. So we bought more. The first 2, we did put 5% down on each one. But then as we're talking to our mortgage broker, where he's like, you don't even have to do that. So that's right. So we bought more, just 100% financing. Now, I do think that we got them for a good deal. I wasn't paying total market rate on it. I think we were getting a good deal on it. But that being said, we didn't put a lot of money into the business. For that was kind of our goal, was like, this is a side business. We're living off of our W-2 income. We're going to see how this real estate thing goes.
How'd you manage it early on?
Myself.
You did it all. You're the handyman, the collector, the whole nine.
Yep. The whole thing. You need to find some kind of HVAC person. You need to find somebody to help you with the big stuff. But the houses we were buying to start with was just move-in ready, because yes, I had been a painter, and so I was kind of handy, but I didn't know that much. I was still in my late 20s at that point.
Up through 2008, were you just largely acquiring property to keep them as a long-term rental, not flipping, just keeping?
Yeah, we didn't flip it. I don't think we flipped anything until 21 or 2022. So we just kept everything we bought. There might have been one or two that we sold on contract, but yeah, we just kept them all. After we bought, a number of them, I don't know, 4 or 5 that were move-in ready maybe, but then I met a guy that was a flipper, and he had bought in quite, really more properties than what he could go through. So he was kind of, I don't know if he was desperate or not, but he was definitely looking for some buyers. And so the great thing about that relationship, though, is that we would walk the property before he did the work, and we would agree on what he was going to do. We would agree on the price I was going to pay. And so then when he started the property, he already knew he had a buyer in mind. I felt like we were getting a pretty good price on it because we negotiated that. Through that process, I learned how to flip properties. So we were talking through, what walls can you move? What walls can't you move? How much does it cost to put a kitchen or a bathroom in?
So what I hear you saying there is you were buying these things on a turnkey basis. Another investor bought them on an as-is basis. You guys agreed to the work that was going to be completed. He did it all. And you guys, as part of that up front, you agreed upon a price in the end. Fantastic way to get a rental property then.
Yeah. So we did that for the first few years.
Yeah.
And then I, at that point, I felt comfortable just doing it on our own. So then we started buying them at the as is. Worked with a contractor to get it fixed up. So we did the burr method, and we've done that ever since, pretty much.
Take me through 2008. Financial crisis hits. What's taking place in your world of real estate at the time?
Let's see, I don't know how many properties we had at the time. Probably 15-ish or somewhere in that range. We also bought a 10-plex at that point with my brother-in-law and his wife. So we went in together, and so we bought that. But really during the crisis, the housing crisis, even though all the values went down, people still needed a place to live. And so our tenants they still had their jobs. Thankfully, they were still paying their rent. We were honestly more concerned about our own jobs. I remember my wife, the company did like a across the board 10% pay cut. And I was somewhat concerned about, my position as well. So we definitely cut down on our spending a lot just to prepare for something like that. Ironically, with our rental properties, we didn't lower any rents. We didn't, it just, the properties just kind of continued to flow like normal.
They do their thing. You've got long-term fixed rate debt on these things. It's not like the stock market where, you wake up one day and it's nothing but blood red that you see on the screen. It's just kind of all that stuff is largely noise.
And then through that, there was a lot of foreclosures happening.
Yep.
Well, all those people that are getting foreclosed on needed a place to rent. So that's a time when I didn't pay too much attention to credit score, because so many, I rented to a lot of people that had gone through a foreclosure. I already knew their credit was crap, but they had a job, and so as long as they had the income, and that worked out all right.
Yeah.
A lot of them just got in over their heads because that's what was happening. Absolutely. They were giving mortgages to anybody and not requiring down payments. Correct. And people would get over their heads. Correct. They would have some problem, then they're going into foreclosure. So
you lose the job, you lose your source of income. Or if you were on an adjustable rate mortgage, then all of a sudden you found that, the 5-year treasury moved pretty hard in 2006, if memory serves me correctly. Before you know it, your payment has gone up 25 to 40%.
Yes. Becomes a good point.
Real quick.
That happened a lot.
Yeah.
Yeah, it was interesting. So, but real estate wise, for us, the stuff we owned still continued to cash flow and operate fine. And then we didn't buy a lot when we owned that 10-plex. We only owned it for a couple of years. I managed it myself, which was that was my problem, right? Because remember, we're still working full time,
Right.
got a couple of young kids, so we're picking them up from elementary school and we're picking up rents on the way home. And so,
You're working.
I mean, that was the daily life, so.
Hey, Iowa investors, this is Ava Bautkamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
Why was it 10plex? What made that so much more challenging than what I almost read between the lines versus 10 other houses?
With some of it was the location. It wasn't, I don't know what class it would be, maybe a C+, B- type area. So, I mean, it wasn't really bad, but it just seemed like I was over there 2 or 3 times a week. It was just hard, collecting rents. Hadn't prepared myself for just the complaints. I mean, they just complain about each other. You don't get that with houses. With houses, they call you when something's wrong, and it's usually the furnace, the water heater.
Right.
They're not usually calling you for, a leaky faucet,
Right.
but unless it's leaking under the sink pretty bad. But there's just a lot less maintenance calls going on. But with an apartment, I mean, they don't do anything. They don't fix anything, I should say. And so, and I think the walls might have been a little thin. I don't know. So, yeah, we were just over there all the time. And I just felt like,
Seems like in some cases, the house is like a homeowner in training versus an apartment is a true by the book tenant. And in some cases, a tenant for life.
right. And you get more turnover with the apartments typically. There's more transient where when you're in a house, people move into a house, they typically have more stuff. They might have a family, a larger family, who knows, but they tend to stick around a lot longer.
No, we see the exact same thing. So you eventually sell that 10plex. Have you picked up a multiplex since, or is the focus really
been on houses? Yeah. I mean, if we buy it, I mean, we probably will get into it at some point, but I won't be anywhere close to managing it. So probably be more of the finance partner at some point or something like that, but not, I'm not even sure if I'd be the operator on it.
Sure. So from the, the backside of the financial crisis through, let's say, pre-COVID, what does that count look like? Well, how many are you up to at that point, roughly?
We got up to about 18 or 20. It kind of varied between 18 and 20 there for up until about 2020, I suppose. And we just kind of bought whatever fell into our lap at that point because I was to the point of where I was kind of maxed out on time.
Yeah.
I wasn't, I was already doing, part of a weekend and a couple nights a week. Yep. And so we just kind of decided, my wife and I decided that, buying more wasn't the priority at that time. So it wasn't until 21 is when I went full time into real estate. And just, it was a combination of my position was eliminated, but even about a year prior to that, I was just really getting the itch. Like I just felt like some change was coming. And so I started working on banking relationships and refinancing houses. The rates were really low at that point. So we, almost all of our houses, all but maybe 3 of them, we got locked in at, under 5 for sure. A lot of 4% rates and, which is fantastic for not owner occupied and, for long-term fixed. But anyway, so we did a lot of that. I started working on getting a line of credit established as well. So by the time everything did fall into place, when my position did officially go away, then we were in a better position to go full time into it. And so my plan at that point was, well, let's just buy, 4 houses a year. I'll do a lot of the work, just focus on cash flow. Because my thought was, I just want to replace my income at that point. So we started that, so we did buy, 4 or 5 for whatever, however we got about 25. My wife and I own about 25 properties now. And so we did that. I don't know if it was 6 or 8 months into that, I reconnected with Junior Ibarra, who we had met, 15 years or 11 years earlier or something like that. Okay. So when he was first getting started as a real estate investor, we met and kind of kept in touch, but really started getting back together once I went full time. And so then I met his business partner, Ryan. They own Team IRG.
Yeah. Cool.
Right. So we started talking, and they hadn't been investing or buying properties because they've been they did early on. Right. But then once they really started the realty team, they just focused most of their energy on that. Yep.
Yeah.
Yep. But they were having opportunities come across their desk that they didn't have time to
Can
take.
imagine.
So we started a partnership, and I do the analysis and look at the properties and manage the rehabs, and we all work together for sure on the partnership. It's Junior and Ryan, and then my wife and I, and so we're all equal partners, if you will.
What year did that take place?
21 is when we started. The end of 2021. Yes. I think it was the end of that year that we did our first deal, actually, before we started the partnership. We're like, let's just try one out and see if we still like each other after it all.
Right. That's a wise idea. The intent of the partnership, or maybe some of the plans as it come through the houses. Is it to flip the properties? Is it to retain them as rental, sell them contract? What does that look like?
Well, it's a little bit of all of it. We're buy and hold people just by nature. They've bought rental properties that they still own, and obviously we've done that too. So that's what we started off doing, most of the BRRRR strategy. That worked out well for the first year while rates were still low and the prices were a little lower, and before the materials really crept up. But then when everything really started ballooning with rates, then we started just flipping almost everything. So we were doing a lot of rehabs. We've tend to, over the 3 years, I guess, three and a half years we've been doing this. So we're probably 25 to 30 houses a year or so that we're going through. And now we're flipping almost all of them. I mean, if they cash flow, we keep them. But as you know, there's not much cash flow.
Get the cash flow without leaving a ton of cash in those deals. And then it becomes really challenging to justify the rate of return on cash you've left in that deal when you can just put it to work someplace else.
Right.
Like the employee to go flip another one.
Yeah. And we did have some of that because when the rates came up, especially if you're using a DSCR loan, right? Yep. So the high interest rate makes a pretty big impact on a DSCR loan.
Correct.
And so as the rates went up, we analyzed the deal, we bought the deal, we even rehabbed it with the intention of keeping it as a rental. And then you go to refinance it and realize, oh, the rate shot up, and, you thought you were going to get all your money back, and now all of a sudden you got, $15,000 still in the deal.
Right.
So.
But you're right. There was a period of time where just what you've described from analyzing that thing to closing to rehab, you may be 60 to 120 days in that thing. Yeah. Interest rates could have moved a full percentage point when things were moving very, very quickly.
Yep.
Yeah. And the treasury, continued to bounce around pretty good over the course of the recent past. Yeah.
And we just went through a period of where, through COVID and everything, where materials got substantially more expensive in a fairly short amount of time. Yeah. Their cost increased kind of following them a little bit, as prices have increased on houses. It's just all the numbers have changed, right? They've all shifted ahead, not equally at the same time.
Right. Yeah.
Which made 2023 a really challenging year, for house flipping, just investing in general.
No doubt about it.
If you're a house flipper, execute the BRRRR strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Are you seeing labor soften up a little bit here today? See, I asked, what I'm thinking is it's harder to find a deal today than what it used to be a few years back, right? There's probably a whole bunch of people who are locked into their sub 4% mortgage who may never move, or at least not for some time, that there's the velocity of deal flows, at least at this, kind of dented and scratched end of the spectrum. There's not a ton of them. And for what's out there, there's a lot of buyers out there who want a deal. And there's just maybe that labor component has softened a little bit because there just isn't as much work as there once was. Are you seeing that, or was my analysis off?
No, I would agree with all of that too. I think it's, we still sometimes, it can be a challenge to find good contractors.
The real ones, right?
It's not a challenge to find somebody that wants to do work. So can they deliver on what you want them to do? That's maybe another question, and on the right time frame and for the right price. But
what are you most excited about this year, 2025?
I think, we got some things. I feel like we got some things dialed in a little better in 2024. You think about, yes, I've been in real estate investing for a long time, but not at the scale that we've been doing it the last 3 years, right? So this is really, for us as a company, this is all kind of, we're still trying to figure it out, right? So we're still, we're all pretty knowledgeable about different things, but when you actually start doing it, right? And then the market changes and just all the things happen, right? And all the experiences come through. It was interesting. I don't know. It must have been at least a year, probably maybe a year and a half ago. We were talking to a mentor of ours, and we were kind of venting a little bit about, we got the buy and holds, but now we're just flipping. So we got all these, a lot of them were pretty good sized renovations that we're going under. Yeah. I was like, our cash flow is tanked. It's like we're having trouble just getting everything because all of our money is tied up.
Flipping is a cash monster.
Right. All our money's tied up in these deals. And he looked and he said, well, you don't have any short-term income. And he said, you got the long-term income, which is your rentals, and you got the medium-term income, which is your flipping business, but you don't have any short-term income. You need to do more wholesaling. Like, oh, okay. So in 2024, and we don't actually wholesale, but we wholetail. So, which just means that we're closing on all the deals we get. We close on them. It's a combination of, first of all, Junior and Ryan are agents, right? So they're realtors, and we're using Team IRG's brand, and so we always want to make sure that we're doing the right thing. Integrity is very, very important to us. So we want to treat people well and do the best we can. And so for us, we like the idea of being able to close on the property, make sure title clears, make sure there's no gotchas or anything in the way, so that we actually own the property. We know it's good to go, and then we'll sell to somebody else. And so it's more expensive that way. It's a little better if you can figure out how to wholesale it, or if you can do a double close. That's you might save a little bit on the double close at least. But anyway, we feel good about it. We oftentimes add some kind of value to it. I mean, it could be just cleaning the property out, but it could be replacing a foundation wall. We've put new roofs on it. If you buy something that's got holes in the roof, that can be kind of scary to people. And so, so we'll do a lot of really big things like that.
It sounds like you got focused on, shrinking that cash conversion cycle. You've got an asset, and it's really a function of how do we just, instead of flipping, how do we get some of that profit moved up on that cash cycle?
Yep. And so that worked out a lot better, so then we were churning those a lot quicker. We still keep some, and we still have our flips that we're doing. So that way we can keep the ones that we want to do, and then sell off the ones either if we have our hands full, then we'll just sell off everything that comes, or we'll sell off the ones that we're just not interested in doing.
Yeah. No, that makes sense. On a forward basis, go out 5 years. What's it look like? What are you guys building for it?
That's a good question. A lot of it is just building the system. It's getting it as dialed in as we can. Obviously, things change. It's kind of a hard business to really dial into, but to get our contractors really locked in, I think is something we're still working on that. I still feel like we're going through contractors. We got some that are good, and we've gone through some more. Anyway, so a lot of it is just getting that dialed in to where we can get some help with just managing that, continuing to manage that business. And I think that'll free us up to do a few other things that are either a little bigger or a little different. I know in the future we'd like to get into lending more. Right?
Yeah. Great business.
Yep. I know somebody likes to do that. So it'd be nice to be able to do some of that in the future, but we're not there yet. So still working on it.
Being the son of a preacher, how did that impact you? Where do you see that in the way you grew up play out in your life today?
I think so. My faith is something that's just important to me. It's just, it's with me all the time. And I think that really helps just my integrity. I just like to do the right thing. I like to treat people well, try to do that as best I can. Certainly not perfect at it, and I'm not sure if it's because my dad was a preacher that I'm that way, but that's certainly the way it's manifested itself as an adult. If you were to talk with me when I was young, I don't think you would have known. I was much more of the prodigal son growing up, and he would tell you that too. I did.
Yeah. You ready for the final 3 questions?
So, sure.
One piece of advice for your 20-year-old self. What would it be?
20-year-old self. I mean, one piece, I guess, is just to stop worrying about what people think about you.
It's a good one. Yeah. 2 books that changed your life.
Rich Dad, Poor Dad was definitely something that really got me thinking hard about real estate. I do read the Bible every day, so that's important to me.
Yeah. if you were cast away on an island for a year, you can only get 3 pieces of data about your business each and every month. What 3 things must you know to know how your business is doing?
Well, cash flow is going to be important. And so that's, a lot of that is just what's the bank balance, but related to cash flow. The other thing is what deals do we have coming in? What's the pipeline look like? So deals coming in, deals going out. Something else I had in mind, but those are probably the most important ones.
2 biggest ones right there.
Yeah.
Dave, this has been fantastic. I really enjoyed this conversation. It's fun to talk to somebody who has a longer term perspective, because it ultimately, when you have that perspective, it shows up in your actions, right? We talk about 2008 because depending on where one is in their focus, right? Because the builders would not be saying the same thing, right?
Right.
There's this constant turn. It just looks very different. So it's been fun to talk about 2008, what that build looks like. Because if you take a long enough term perspective in this market, in the real estate holding market, really in the stock market too, if you're in it long enough, time cures all ails.
That's exactly right.
Yeah. You're building for you, we talked before you got on. The goal was to build. What you shared with me offline was you didn't take out any cash in that house business, until you got to a spot where it was time to leave the job. In 2021, when you bought your first property in 2004,
right.
All the money was recycled back into buying the next property.
Yeah, really. Sometimes people would ask me about it, and I would say think about working a part-time job for 20 years and not getting paid until the end. But then when you did start getting paid, you didn't have to work your full-time job anymore. So it's, that's more along the vernacular of what we're talking about. Yeah. So that's kind of what happened.
That's great. For people, they want to find you, follow you, connect with you. Where can they go? What should they do?
Let's see. I got a Team IRG email address. So dave@teamirg.com is a good way to email me. I am on Facebook as well. Just Dave Ferris.
Perfect. We'll stick it below in the show notes, everybody. Dave, I appreciate you being here.
Sounds good. Thank you very much.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.